Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Thursday, August the 4th, 2011. Well, quite an exciting day for the S&P 500 today. We have a very large red-bodied candle, and a candle that's continuing to make lower highs and lower lows. Yesterday we highlighted the potential for a change of trend to the upside. We had a hammer type pattern, and that was where we saw this very strong upside price rejection from support around 1232. We do note continually that these patterns are potential patterns, and we do need confirmation of the patterns. And confirmation of this reversal pattern would have been a candle with a higher high and a higher low. This market failed to take out the high of the previous candle and has continued with a lower high and lower low to the downside. The market blew away quite a few areas of potential support. The 1232 region that the market had traded to yesterday and had bounced from was blown away very quickly. The 1219 area of support was taken out, and we mentioned yesterday that the market could trade down to the 1200 round number and find support there, and that's exactly what's happened. The market has held up within that region, traded just below there, but this will act as a zone. And round numbers tend to be very big levels of support and resistance, and we saw previously how the 1300 level on quite a few occasions acted as a strong area of support and resistance. So this is a really big number for this market for the next day's trading. If we see the market start to trade negatively below there at the start of trading in a very decisive way, we will most likely see much lower levels. Now, we do have a few areas of support down below the 1200 region, 1191, 1183, 79 and 73. Some of those are minor levels, and the biggest level there that we have is the 1173 region that was tested on about 3 or 4 occasions previously, so that is a very strong level. So if the market does trade down to that level, we should see strong support down there. What can we say about this candle? A very large red body. The sellers have made very solid net bearish progress, the most amount of net bearish progress that we've seen for quite a long period of time. We've had the sellers close the market in control, very strong control. They've shown very strong commitment, and there was no strength at all from the buyers, so quite a negative day. In Ichimoku charts terms, we're trading down below the cloud, and we had the bearish breakout below the cloud. Initially, the breakout was on an indecisive candle, and then the next day we had this very bearish day, so a sell signal on the Ichimoku chart in big picture terms. Also trading down below the Kijun-sen and Tenkan-sen, which means that the market is negative in the medium-term and fast-term timeframes, and the Chigas band here is below the corresponding price action, and that's confirming this overall negativity that we're seeing in the market. Both of these indicators, the Kijun-sen and Tenkan-sen, are pointing down very sharply, reflecting this strong downside momentum that we're seeing. This market is looking very overextended. It's looking quite oversold at the moment, and I'm talking about short term. It wouldn't surprise to see the 1200 level hold up as support for this market. We could see this scenario where we have one of these candles where we see buying coming in at lower levels, but not a very decisive close with a very small body, with the market taking a rest, and that's what we quite often see when we have these really big volatile days. That doesn't mean that the trend will be over. This first time frame downtrend will be over when we see a candle with a higher high and a higher low, and we start to retrace part of this first time frame downswing. This downswing has been in place for quite a long time, so based on that, it wouldn't surprise to see the market hold up. Now, with our Ichimoku indicators, all of these indicators represent equilibrium in the fast, medium, and short-term timeframes. And the market is trading a long way from that equilibrium, so we are seeing a market that's becoming overextended. So if we do see bullishness coming into this market, and I do mean bullishness, I don't mean small bodies and whatever. I mean evidence of bullishness, then we could see the market retrace part of this first time frame downswing. If we do see the market test up higher, then obviously these areas that we traded through will offer themselves as potential resistance. And certainly this area here where we saw the upside price rejection around 1232 will be a very big area for the market, but we do need to sit tight for tomorrow's trading. Won't see how the market reacts to lower levels if it does test lower, and there's every likelihood that it will. And certainly not a market that we want to be a buyer in. We might take a look at the longer term and take a look at the weekly, how that's developing now. Well, on our weekly chart, we actually have the current candle is still developing, so we have another day's trading to go. And it certainly looks like we will have a close down below the neckline of this head and shoulders pattern that we highlighted previously. And it will most likely be a bearish close unless this market appreciates rather substantially. We'll also have the market trading within the cloud, so that itself will offer potential support to this market. We can see we've highlighted this 1200 round number that obviously, based on the daily chart, which is and the weekly here, which is incomplete, that we could find support there. If the trend does continue down and we do have this bearish breakout down below the neckline, which would be confirmation of the head and shoulders pattern, we have a target roughly down around 1150, and that is below the cloud. So if we do see a bearish breakout down below the cloud and the target reached, then we could see this market trade to substantially lower levels and perhaps test down to even 1100 if that trend in the medium-term time frame, and by that I mean these weekly charts, if that does continue down. Let's wait and have a look at this chart when this week is finished, however. Just some other charts worth taking a look at here. We have silver, and we can see that we had a bullish breakout up above the cloud, and that was a buy signal in Ichimoku charts terms and a failed signal. Quite often what we see when we see a breakout above the charts from the flat area of the chart, when the top of the chart is flat, they can be false breakouts, and that's exactly what's happened here. We have a false move here. It was a bullish candle though, and then we've had this substantial sell-off today with this very large red body candle. Support down around 39.47. The market did test down to roughly to support at around 38.18, and has the buyers have come back in around that area, so that's an important area for the next day's trading. A neutral market in big picture terms, bearish in the fast term time frame, but bullish in the medium term time frame. We'll take a look at gold, and here we have very indecisive trading as the market's testing up around the 1680 level to 1643, and we're in a first time frame and second time frame uptrend in bar chart terms, an outside day, but a spinning top type candle, the second spinning top candle in a row. So a lot of indecision in this market, a market that wants to trend up, but the sellers are coming in as the market's testing up around 1680 and 1670. And also the buyers are coming in as the market's testing to lower levels. Now, as we highlighted previously, when a market has strong upside momentum, the first level of support for this market is quite usually the Tenkan-sen. We can see here the shadow on the bottom of the candle as the market tested to the Tenkan-sen at 1643 and found support at that level. So that will be an important area if the market does sell off the low of that current candle. Bullish in all time frames, retracing back towards this Tenkan-sen, but still quite a very, very bullish market. But there is potential for the market to come off and test to lower levels because of this indecisiveness that we're seeing at these highs. We'll now take a look at light sweet crude oil, and we can see that the trend is continuing down. We had a bearish breakout below the cloud roughly about a week or so ago, and that was a sell signal in Ichimoku charts terms, and the market has gone on with that, taken out a few important areas of support, 94.64, 92.57, and this region here around 90, where we saw solid buying coming in and upside price rejection when this area was tested on 3 occasions, and that was also the top of a window, and that window has now been closed with today's trading. That could be very significant for this market. That window was open some time ago and has held as previous support. Today, blown away totally by a very large bearish candle. Next support levels are down around 85.11 and 84. So there should be some good solid support down around this 84 level. And it was tested on quite a few occasions previously. In Ichimoku charts terms, trading down below the cloud and following through from this solid breakout that we saw. So bearish in big picture terms, certainly bearish in the medium term and fast term timeframes by trading down below the Kijun Sen and the Tenkan Sen.